Yeah, where are we in terms of the current market? There's no other way to describe it, and people get a bit concerned about my embellishments, but this market is absolutely red hot, and it's red hot across most geographies and across most commodities. There's very, very few segments of the market that aren't performing just incredibly well, and the depth of purchases on almost every campaign is unprecedented. Grazing and cropping land values, obviously the bulk of the market, remain strong, and they're strengthening. And so what we're seeing is every time there's a new auction on whatever platform, on whatever sale process, we're seeing ostensibly a new level of value. The market continues to move into uncharted territory week by week, month by month. Debt remains highly accessible for customers with strong balance sheets, and noting that most balance sheets have increased significantly, most have doubled, particularly in the grazing and cropping land values over the last 3 to 5 years. And look, one of my sponsors here today is the National Australia Bank. The National Australia Bank, ladies and gentlemen, are open for business, very competitive. If you need to borrow money from the National Australia Bank, they'll make sure that they're market-leading interest rates. Is that right, Jon? Thanks, mate. Yeah, thanks, guys. That just got me 50 bips off the next loan. The market's been driven principally by local farmers affecting farm build-up strategies to increase scale and operational efficiency. So that's nothing new. I think the difference is the physical volume of farmers that are experiencing that much positivity, that they're looking, to rapidly expand. It is also providing a very elegant exit for those people who, are at the point where they either want to transition out of land, that they think's become too expensive for them to operate, or to retire out of farming altogether. And so the depth and strength of the market is facilitating that change, and it's facilitating it very, very rapidly. There's also, obviously, domestic and global institutional investors, and they're the people that we've been dealing with at the scale of the assets that we typically sell most of the time. For what it's worth, there's a whole lot of money kicking around the market that wasn't deployed last year that's still been allocated here, and there's $3 or $4 billion of fresh capital, brand new capital, from new market participants that are looking to deploy money into Australia. They really like Australia. It's a safe place to invest. And so we've had some of the early movers in terms of the big pensions and some of the people who are represented here today. And there's a second wave or even a third wave of capital coming in behind them now. And some of that's funds of funds. Commodity prices obviously remain very high. That's across the board, or for the most part. And almost the whole country's full of moisture, so that the effects of that widespread and long-standing La Nina are obviously driving a whole lot of that positivity as well. So what does all of that mean? Well, in my mind, all of that points to a continued strengthening in land values, and that's simply a function of the fact that demand continues to outstrip supply. Everyone says, it's commodity prices, it's moisture, it's kids coming home, it's all these things that are driving the market. I don't know that I go to that. I think the key driver is the low cost of debt. In most of our lives, I don't think any of us have seen debt as available if you've got a good balance sheet and a good track record at the prices that you can access it at. And for top tier operators, well capitalised groups, people with a plan, they can access it for very low amounts of money. There's a whole raft of people out there who are taking the opportunity as large family farmers, to step into that really almost family corporate type space and buy 20, 50, $100 million properties. It's amazing when you see the journey that some of those people have been on from the 80s and 90s to where they are today in the 2020s, and the physical amount of debt that they're able to take on and sustain, given the confidence and where things are at, but particularly given the low cost of debt. So for context, I had one of my clients the other day who's top tier beef operator in Northern Australia. He invited me into the office and they cooked me a steak, and he and his CEO, and I thought that was novel. I've been invited to the office for a meeting and they're cooking me a steak, and they're arguing about the fact that the CEO's ruining the steak. I was quite happy for it to be sort of medium well. And these two guys, older, 60 and 70 years old, they said, look, Danny, thanks for coming along today. We just want to have a talk to you. We're on a bit of an expansion phase. And I said, an expansion phase? They said, an expansion phase. Yeah, we want to buy another, $200 or $300 million worth of breeding country. So I put the knife and fork down for effect, And I said, why would two of the smartest, most experienced blokes in Australian agriculture invite me here and tell me that at record land prices and record cattle prices, you want to go and buy $200 or $300 million worth of country? Yom's trying to work out who it is. He's trying to finance them already. Look at him. Why would you? They don't need it, mate. Why would you go and do that in this market? And the patriarch of the family said, that's what I said to him. And he pointed to the CEO. And the CEO said, well, it's going to cost us about 1.5% to borrow all the money. And I said, yeah. And he said, and that's 15,000 a million. It's going to cost us 15,000 a million to borrow the money. And I sat there for a while and thought about that. 15,000 a million, that's not a lot of money. Then I said, what happens if interest rates rise? They said, well, how much are they going to rise? Is it going to become 25,000 a million? Is it going to become 30,000 a million? Is it going to be 35,000 a million? Like, what are you talking about? How much the interest rate's going to rise? And I thought it was a really telling thing. You know, they're sitting there saying, we want to really take a big step while there's this confidence about what the cost of debt's going to be and while things are good, to make a generational move, a multi-generational move to underwrite the size of their business. And I think that's a big part of the market. In terms of selling process, auction, which I never do, I might get Daniel up here. Daniel, can you run an auction? Where's Daniel? Auction has been the favoured selling method for smaller holdings, and the market has quickly embraced online auctions. So in COVID, we all got used to looking at a screen and pressing a button. And I must say that Auctions Plus platform and what they've been doing in terms of doing that sort of sub $20 million sale process has been extraordinary. And people's want to continue to press the button and keep bidding, has been another thing that I find extraordinary. And they've embraced it and they're happy with it. What changed in the last 12 months? There's sort of been a changing impetus in the market in my mind. And I just want to contrast a couple of deals, and they're our deals, sorry about that, but I want to contrast a couple of deals that occurred last year that I think showed that there was a tipping point around spring. So last year at the start of the year, we were lucky enough to be appointed to sell Lawson Grains, fabulous business, appointed on behalf of Macquarie Bank, and we ran an international sale process. We invited interest from domestic parties. We got 130 or 135 EOIs. A lot of those were from local buyers. And then we had 2 or 3, really good bids at an institutional level for the whole business and for the whole business as a going concern. We didn't get enough interest from all of the individual bids to be confident that we could sell every parcel of land and remove the transaction risk for the vendors. And, the sum of the parts was actually a little bit less than what we're able to achieve for a sale of the business as a going concern. So towards the end of the year, end of the financial year, that deal went to contract with a settlement period, towards the end of January, and everyone was happy. Great program, sold to a premium to the 2020 book values. Everyone's happy that the business remains intact. Feel good feeling. Straight after that, we were appointed to sell the Coronella assets on behalf of Proterra, and that was a spring campaign. So we're Q3 now, into spring, and it was also an EOI. Different geographies, but the concept was still the same. We took it to market both as a portfolio and individual parts. So we commenced in spring 2021, short and sharp. Demand from individual farmers was extraordinary, and after the first round of the EOIs, we actually took a boardroom auction for one of the assets, and we had 3 bids on this asset at $6,000 an acre, which in and of itself was a district record. Then we invited those 3 parties. We said, look, for procedural fairness, we can throw a blanket over where the 3 of you are. You've all been on the same terms. Would you prefer to do a closed shop boardroom auction just with the 3 of you? They said, yes, please, we would. And we did an auction and it went up in we commenced at $6,000 an acre. It went up in $100 rises, $100 per acre rises, and it settled at $7,500 an acre. So $6,000 an acre was a record. In a competitive process with all that tension, 2 of the 3 were adjoining owners. They'd always, for generations, coveted wanting to own this property. They paid $7,500 an acre under auction conditions. And the NAB financed that one, Jon. Thanks, mate. In relation to the rest, we sold the Wimmer aggregation to a large institutional investor, domestic money though. We had a syndicate of 11 parties buy the Western District aggregation. We had a syndicate of 8 parties buy the stuff down near Penola, and that was very smart by both of those parties. An accountant out of Ballarat got a syndicate together on the Western District stuff. a local agent, really smart young man, got 8 of the neighbours together to buy the assets in South Australia, and then we went retail on the balance of the assets. We did 27 transactions, and all of those settled in late January and early February too. So same settlement window as what the Lawson Grains deal was. The 2020 book value was circa $280 million for those assets. The portfolio bids we received, which we thought were pretty good, were between 310 and 330 million. But by undertaking a breakup, the vendors received $370 million, which was $90 million more than the 2020 book values. And so I think we had this point in spring with renewed confidence, with people looking at, potentially another excellent harvest, with lots of moisture in the system, with debt availability and stability in their farming processes and systems, and some confidence where these guys really came in hard for these excellent assets down in Western Victoria and South East South Australia. And, $90 million as a premium to book on the 2020 values is a pretty handy result. These two sale processes for similar type assets demonstrate what we believe is a significant step change in the market. Demand from local farmers is exceptionally strong, and deals can be completed on cash terms with short settlements, almost no representations and warranties in the contracts. So reps and warranties is a big deal when you're dealing with an insto, and no Foreign Investment Review Board approval. Large institutional investors are finding it hard to compete in these circumstances. So, there's a big incentive if you're doing a divestment of a large portfolio, and you need to do it anyhow under the FIRB rules, to embrace the opportunity to go retail and go into the domestic market. And you can deal with the transaction risk if you've got cash unconditional contracts, immediate release of deposit. You can get yourself on the same footing or a better footing than the institutional investors. Other market segments. I'm going to talk about a couple here that a lot of us don't think about, and fruit and vegetables is one of those. It's going through a period of significant consolidation. The effects of COVID on labour availability has been significant, as have the changes to labour laws and the minimum hourly rates. That, combined with an ageing ownership base, has seen a number of these owners make the decision to divest. And we think there are some really good buying opportunities. Paul? Nick? We think there are some really good buying opportunities in this space. And we're starting to see a lot of those assets being institutionalised, and most of the money that's coming into that space is North American funds. There's some big deals happening in stone fruit, pome fruit, protected cropping, glasshouses, netted developments, and I think that's probably going to be one of the more active spaces that you'll observe over the next 18 months as that market goes through a somewhat disorderly transition. Edible nuts. Everyone loves almonds, don't they? I mean, I'm a big eater. I eat a lot of almonds. Edible nuts remains a hot investment. Actually, I'll digress for a second. I'm on this call the other day with this big global institution, and we're talking about horticulture, and we're talking about nuts, and we're talking about, citrus, and, healthy eating habits, and how all these investments drawn to healthy eating. And I'm going on saying, oh yeah, as you know, there's obviously this really big wave of money that's coming into, healthy and nutritional foods. And I heard the words come out of my mouth. I think I'd just eaten a quarter pounder, I heard the words come out of my mouth, and I said, guys, stop. I can't say that with a straight face. And these Americans sort of look at me, look, what are you talking about? I said, well, do I look like I'm eating any healthy and nutritional foods at all? And they said, oh, you're a late adopter. Yeah, no, we'll get you there. Anyway, so no healthy and nutritional foods. But, edible nuts remains a really hot investment space. There's significant volumes of institutional capital flooding into almonds, macadamias, pistachios, pecans and walnuts. It'll be one of the hottest land use change development sectors of the market. So there's vast quantities of capital coming in, trying to pick up that development profit by finding a site that has the right ingredients, that they can make shovel ready, possibly even stick the sticks in the ground and pick up a development profit. And to that extent, we're taking one such portfolio to market at the moment, and that's a fascinating project where they've done 70 acquisitions around Kattunga, Strathmerton, north of Shepparton, and that's Go Farm. And that project's getting extraordinary interest from institutions in an area that was closer settled, that was made up of 100-acre blocks. These guys have consolidated through those 70 transactions 6,500 hectares in an area that was closer settled in 100-acre blocks. They've consolidated 50-odd thousand megalitres of various water entitlements. They've done soil amelioration, planning. It's shovel ready. They've proved the concept by planting a couple hundred hectares of almonds and some Aphora mandarins, and the money for that's coming from everywhere. It's actually very exciting. And there's some of that new money, some of that new $4 billion that we talked about in fresh capital is looking at that side as well. The white meat sector, pigs and poultry, also continues to consolidate, with the most notable deals this year being JBS's acquisition of Riverlea Pork, BGH, the private equity group, the ex-TPG guys, their acquisition of Hazeldean Poultry, and the current marketing of another significant pork growing business. This sector continues to benefit from its place as the cheaper alternative to red meat protein, as prices for beef and lamb remain at an all-time high. I'm really excited about the fact that the private equity guys went out on that Hazeldean job because they've appointed us to do a sale and lease back on the sheds. So that's good. Private equity like to do that, make a capital lot. So that's a deal that's in the market at the moment that I think we should have complete, over the next 3 or 4 weeks, I suppose, at 200 to 220 million bucks. Aquaculture. Aquaculture has also been a hot investment sector this year, noting JBS's acquisition of Huon Salmon. Geez, they've been busy, JBS, haven't they? Huon Salmon and their on-market shootout with Twiggy Forrest. Major competitor Tassal has continued to consolidate its footprint in prawns as well. So we're seeing lots and lots of action in aquaculture, and we're seeing lots of relatively smart money moving into oysters and prawns in particular. You've obviously seen all the action that there's been in salmon, and I think some of that might be the knock-on, as it is in the white meat protein sector, from where red meat protein prices are getting to. There's a significant interest in aquaculture. Timberlands. Timberland remained a hot investment sector as Global Forest Partners sold their 24,000 hectare portfolio for a record $780 million to AXA IM out of the UK. It's just a remarkable transaction at just an amazing level of value, and I'm told by people that are smarter than me that, in terms of the running yield, if you like, or the IRR on that's sort of a new level of value. So 24,000 hectares encumbered by forests, including the timber, $780 million, amazing. And I think, AXA IM probably was on no one's list, and I should have said when we were talking about Lawson Grains before, I'd say AIMCO New Forest was probably on no one's list. And so this is the sort of money that you're starting to see come into the market. Cotton, broad-scale irrigation. Ooh, how exciting is this? $800 cotton, magnificent. It's resurgent on the back of widespread water availability across all the growing regions and an incredibly high cotton price. There are a number of very large deals happening in this space, both in the traditional growing zones on the eastern seaboard, as well as a wave of what I'd call pioneering investment capital moving into vast areas of northern Australia. I've got some concerns about some of that stuff that's happening in northern Australia, but I'll keep those to myself. I am really pleased to see the positive effects of a return to better seasonal conditions on some of the traditional growing areas. Headwinds. Input costs, particularly cost of nitrogen and diesel, is the major concern for producers going into 2022. Labour shortages remain. The cost of skilled labour is also increasing rapidly. Has anyone tried to put on a farm manager, a CEO, some senior people in their business to steward, $50, $100, $200 million worth of assets lately? Very hard to find someone that can do that and do it well, and they cost you a lot of money. Land cost for new entrants is prohibitive in many geographies in an environment where existing owners can justify a higher cost based on a dollar averaging to historical cost. So some of that new capital that we're talking about coming in, that $3 or $4 billion of fresh capital, can't make the numbers work in a whole lot of traditional investment areas. So seeing those guys, move away from what would have been sort of core plus, if you know what I mean, and they're moving into areas that probably have a different group of risk metrics because on the spreadsheet they can make the numbers work, and in those core areas they can't make the numbers work because the locals are able to blast them out of the water. Opportunities. Land use change remains a major draw for new investment, particularly in Northern Australia, the Southern Murray-Darling Basin and Southern Western Australia. Many farmers are looking very sensibly, in my mind, at productivity improvements through further investment in their existing holdings rather than buying more land, and they're judiciously using core debt for this. So, I think it's investment 101. If you can't pull on the place next door because you think it's too expensive, but you can increase productivity by doing some work to your own land, absolutely do that. And I think there's really, really significant volumes of investment happening on existing farms in addition to what's happening in the market in terms of new transactions and people pulling on more land.